A debit card is a plastic card that you receive from the bank. This card is directly connected to your bank account. So as soon as you use this bank card, the bank will automatically take money out of your bank account and transfer it to the account of the recipient. The debit card is connected to your current account as follows. So if you want to withdraw cash, you can go to the ATM or you can go into the bank and you can use this card to withdraw cash. When you withdraw cash at the ATM, the bank charges is much lower than when you do it at the cashier in the bank. A debit card can also be used instead of cash to pay for purchases from suppliers. So it means I buy goods from a supplier and I pay them with a debit card. And then the bank will take the money immediately out of the bank account of the business paying the money and transfer it to the supplier's bank account so that the transaction is concluded immediately. A debit card can also be used to pay for sales in store. So your customers can come in and they can pay for the goods that they purchase with a debit card, and the bank will then immediately transfer the money from their bank account into the bank account of the business. So you can also use it to pay for expenses, and then you don't have to use a EFT. When a client uses a debit card, what is the transactions that you will record? When they use a debit card for sales or for services rendered, it means that we will record it in the cash receipts journal. Now, if I look in my cash receipts journal, I have a column for analysis of receipts, and then I have a bank column, and then, for instance, sales and the other columns. So if we sell something and the people pay with a debit card, it will not appear in the analysis of receipts column because the bank will transfer the money directly into the bank account. So you will show that 10,000 was transferred to your bank account directly and your sales was 10,000. Where if you sell for cash, you will have to show in this analysis of receipts that we received 4,000, and then at the end of the day we have to complete a bank deposit slip and put the 4,000 into your bank account. So the difference between cash transactions where the people pay immediately is that you receive cash and you put it in your till, and at the end of the day you transfer it to the bank. If you sell goods for cash but the people pay with a debit card or a credit card or an EFT, then it means that you will not record anything in your analysis of receipts column. When the business uses a debit card, it means that they can pay for the expenses or for the goods that they purchase with their debit card. This will be recorded in the cash payments journal. And you will have a bank column and, say for instance, a trading stock column. So the minute that you swipe that debit card to pay for the goods, the bank will transfer the money from the bank account of the business to the bank account of the supplier. So we record this as a cash transaction because the money is taken from our bank account immediately. So in the bank account I will show that we've taken 20,000 out of the bank, and I will show that my trading stock increased with 20,000. So for transactions in a business, you can either use your debit card or you can use an EFT to make payments, and you can withdraw cash at the bank and also pay with cash. What's very important is that when you use the debit card, that you realize the money goes out of the bank immediately and it must be recorded as a cash transaction.